What's up, everyone? Excited to give this video today about Upstart Holdings, which is up over 17% today in reaction to news of some analyst upgrades, which I'll dive right into. So, for those that don't know, we had BTIG analyst Lance Jesserun expect Upstart's revenue to exceed guidance and consensus by $10 million. He put out this new note basically explaining that opinion. He said, "We model our rate request assumptions based on a rebound in web traffic volume seen during Q2 and assume a 10% conversion rate, modestly higher than the prior quarter, but far lower than historical averages," he said in a note. So basically, he's predicting earnings based on web traffic, which I thought was a super interesting idea, right? So super thoughtful note from him, and he's kind of trying to front run results that we should see on August 8th. So his prediction is based on the web traffic that results will be very positive. Another thing to note here is that while Upstart's stock has rocketed since the start of the year and it has a large percent of short interest, S3 Partners doesn't attribute the run up to a short squeeze. So this is a quote from one of their partners. "We have not seen short covering in any large size in the name yet," he said in an email to Seeking Alpha. "There have been 1.7 million shares bought to cover, worth $28 million over the last week." So, it's kind of interesting to see that we haven't seen the amount of shares kind of be covered that would imply a short squeeze, which to me tells me that, there still is that short squeeze that could act as a tailwind for shares. So that's still very possible, right? So obviously this note sent shares up higher today. Obviously very good sign for shares. And then I had put out a video explaining my bullishness on this stock 10 days ago. And obviously shares have rocketed higher since then. And I also put out a bullish video a couple months ago on this stock as well, once we were just starting to see that breakout. So I think I can call this chart pretty well, and I have in the past. All you got to do is go in my video history. But let's just talk about the future here. So we see resistance at about $55, which is where shares had topped out in June of 2022. It's also where shares had topped out in May of 2022. So this level had in the past acted as resistance. And then once we broke above it, we came back down to test it, and we actually held this level and moved higher. So, very important to see that this level is holding. And given that, we could see a move up to $90 over the coming weeks. And I picked $90 as a price target just because this is where shares had topped out in May of 2022. It's also where shares had bottomed in March and in January of 2022. So that has been a significant level of resistance and past support. And for those who don't know, past support becomes new resistance. So I believe this $9 level will act as resistance for the stock, but obviously that's 30% higher. So that would kind of be a good problem to have for shares. And then when we take a look at momentum here, so shares are above all daily moving averages, and we had the 50 DMA cross above the 200 DMA on June 9th, which for those that don't know is called a golden cross and implies bullish momentum. So really all these technical factors kind of lining up to the upside here, which I do believe could cause a move higher over the coming weeks. And then when we take a look at this massive move above resistance that we got last Wednesday, what I love to see is that this break of resistance coincided with a large increase in volume. So we had our largest volume day since May 22nd. That was on July 19th, once we got that break of resistance. It's always good to see. Anytime you see a break of support or resistance coinciding, happening at the same time as a jump in volume, it's always a good sign that break in resistance, in this case, should hold. And that's obviously what happened over the coming days. And then we got the larger move higher today. So my official prediction is that this $55 level will act as support, and we'll see a move up to about $91 over the coming weeks. Given we don't kind of fall off a cliff here on earnings. But as we just read from that note, it seems as if web traffic is implying that the company will report better than expected earnings. So decent numbers there. And then when we take a look, so one kind of caveat I'll put on all this is shares are overbought according to RSI. Typically, overbought RSI just indicates that shares could likely pull back. Doesn't happen every time, obviously, but it definitely can be a signal that shares are likely to have at least a short-term pullback. You can see here on February 2nd, we read an overbought condition and we pulled back over the coming weeks. And then you could see we read an overbought condition on May 10th, but we continued higher over the coming weeks. So it's not the end all be all, right? No, not there isn't one single technical or oscillator or signal that can kind of tell you to buy or sell with 100% accuracy. But this here definitely is a sign that shares could experience a short-term pullback. But like I said, over the coming weeks, over the coming months, I do believe we likely move up to about $90. That's just my opinion on shares, not financial advice, obviously. And then when we take a look at what the company has done in the past 2 years, so obviously the company's only been trading for about 2 years now, but July tends to be a very bullish month for the stock. August also tends to be a very bullish month for the stock, and September and October as well. Just so you're aware, this screen shows me the average monthly return for shares. So in August, shares are typically up 16%. So definitely seeing that bullish technical setup kind of line up with those seasonality trends. And then when we take a look at short interest here, so days to cover is at 3.0. For those that don't know, that basically means that it takes three days of average volume to cover the shares that are sold short. Obviously, we have almost 39% of the shares sold short, which is pretty staggering. And that comes after an increase over the last short interest period. And short interest gets released twice a month. So, basically, a little over a week ago, we got a 8% increase in short interest from the stock. So, all in all, pretty still seems like the company has some potential for a short squeeze over the coming weeks. Obviously, we'll kind of see how that plays out based on trading here. But that being said, let's take a look at all of the price targets for the company. My apologies, I thought I had this pulled up. But we can see here that there's 3 separate analysts with buy ratings, 4 with hold ratings, and 3 with sells. And the kind of wide-ranging opinions on the stock is definitely shown here. So the largest price target is at $345 by Barclays, or excuse me, it's $245. They must have lowered it. But so $245 obviously showing massive upside. And then the lowest price target is $6. So there's definitely a wide range of opinions on Wall Street for this stock right here. But the BTIG upgrade that obviously happened today, and they upgraded shares to a $72 buy price target. So awesome to see those upgrades. And then we also have Stevens & Co., Mizuho. Both of these companies need to kind of change their ratings here. So they both have, one of them has, at Mizuho, they have an underperform rating on the stock. And obviously that makes sense for the price target. But let's take someone who has a bullish opinion on the stock, which obviously there aren't many. But let's say you're Citigroup and you have a buy, but you have $180 price target on the stock, or excuse me, you have a $50 price target on the stock. You may adjust that price target as numbers kind of change. So don't be shocked if you see some, price targets come out that aren't, that are more in line to where shares are currently trading. So don't be shocked if you see that there. And then obviously there's 6 firms with sell ratings and 4 with underweight ratings. So overall, there's basically 3 bullish, 4 neutral, and then 10 sells for Upstart here on Wall Street. So not really a general consensus, definitely a wide range of opinions on Wall Street. But with that being said, I'll play a video that I had made just last week actually. I'll play the back half of the video where I just explain Upstart's financials, their AI opportunity, and a couple other things. Definitely things that if you're a long-term investor, you should really be cognizant of and watching. So I'll play that clip for you right now. Let's take a look at a couple notes here. So obviously, Upstart uses artificial intelligence for its traditional credit scoring methods, which has provided massive benefits and is a huge differentiator for the stock. And let's take a look at this chart here. So Upstart's model is significantly more accurate than lending models, allowing to approve more applicants at lower loss rates. So this company is basically being able to do more loans at less cost because of their AI system. So compared to U.S. large banks, they have 173% more approvals at the same default rate. And then there's also 53% fewer defaults at the same approval rate. So Upstart is really just doing it better in pretty much every sense of the meaning. It's approving more loans, and it's seeing less defaults than large U.S. banks, which have more stringent and strict lending standards. So really awesome to see this. Upstart's model train on over 100 billion cells of performance data with an average of 90,000 new loan repayments added each business day. 23 model upgrades delivered in Q1, including the largest single accuracy improvement measured in Upstart's history for small dollar loans. So they're constantly improving their AI, right? That's how AI works. The more data you feed AI, the better it gets. So over time, their lending system, their lending strategy gets better and better. So that's really awesome to see. And then one more point I'll make. You can see here the performance here has gotten better over the past couple of years, which we like to see. And then the growth thesis for Upstart centers around its ability to take market share in the personal and auto lending, as well as new markets such as Helcos, and that's just real estate. On the conference call, management noted that 90% of Helcos real estate are financed by banks and credit unions, making it likely that banking partners would be willing to work with the company. So given that Upstart has this amazing system for lending out capital, well, it's very likely that they're going to be continuing to garner partnerships with larger banks who have a kind of have the larger book of business. All they really need is the system of Upstart to kind of optimize their book of business. So don't be shocked if you see a continuation of deals with large banks and credit unions over the coming years for the stock. With that being said, let's take a peek at some of the financials for the company. So right now the company doesn't make any money, so it's tough to kind of give them a grade for valuation, obviously, right? But when we look at price to sales, we're trading at a price to sales of 5.8, which is below the sector median, above the sector median, and this is a number where the lower the better, right? So although we're nearly double the sector median, we're below our 5-year average, which is awesome to see. The 5-year average for price to sales is at 8.5, and we're currently at 5.8. So I know we've gotten this huge run over the past couple weeks, but at the end of the day, this price to sales number is cheap relative to historical valuation. Let's take a look at some growth numbers here. So year over year is 97%, which is well below the sector median, which actually saw a rise of 6% over the year. And this growth is well below Upstart's 5-year average growth of 93%. So definitely are seeing growth numbers slump, which is likely playing into the underperformance we've saw over the past couple years, really. Or I shouldn't say years, but before 2023, the stock was underperforming a bit, so the growth numbers were likely playing into that. So growth numbers, to be frank, need to kind of turn around here. Obviously, we talked about all the growth drivers for the stock, so I do believe these numbers will be able to turn around. And then let's take a look at profitability. So gross profit margin is very healthy at 72%, which is well above the sector median of 58%, but is below our 5-year average of 83%. For those that don't know, gross profit basically is just revenue minus cost of goods sold. It tells you what you make on everything that you sell. So, 72% is a pretty good number there. And then we have $4.68 in cash, which is a pretty solid number. That basically tells you that the stock's market cap, 10% of it is in cash, which is definitely a good sign and shows that the stock has a good floor and a good cash base to help fund its future growth endeavors. So these gross profit numbers, the profitability numbers in general look pretty solid. And then when we take a look at the companies compared to each other, the peers compared to Upstart, we can see that, well, over the past 12 months, the stock has greatly outperformed. So the stock is outperforming SoFi, PayPal, Ally Financial, and Affirm. So we're seeing that pretty massive outperformance, and this is definitely good to see for the stock. And for those that don't know, when you have a stock that is outperforming its peers, that trend tends to continue. So always good to see that trading outperformance. Hopefully we see a continuation of that. And then let's take a peek at some of the valuation numbers compared to peers. So Upstart is expected to have a 71 times PE next year. And then Affirm is actually projected to be negative, and SoFi is also projected to be negative, and Ally Financial is at 5, and then PayPal at 12. But Affirm and SoFi are both, pretty far from profitability. SoFi projected to be profitable in 3 years. And then let's take a look at the growth numbers. So Affirm, SoFi, Ally Financial, PayPal, they all have better growth numbers than Upstart. Upstart actually ranks out as the worst growth numbers amongst the peers, but we do like to see that its 3-year compounded annual growth rate, so growth in year 3, is projected to be 64%, which is definitely outperforming generally the peers besides Affirm. So over the next 2 years, growth is projected to be pretty poor, but 3 years out and 5 years out, growth numbers do look very solid for this company that has a bunch of growth drivers, as I explained earlier in the video. And then gross profit margin is at 72%, which is a good number. It comes in above Affirm and basically in line with SoFi and above PayPal. And then net income margin is minus 41%, which is a pretty bad number. But when you compare it to peers like Affirm at minus 64% and SoFi at minus 14%, it's not too shabby. And then we can take a look at short interest compared to peers. So short interest is highest amongst Upstart, and it's not really close. Upstart has almost double the amount of shorts than all the other peers. So definitely seeing shorts be very interested in the stock. But, depending on how you look at that, you could say, all right, Upstart has a higher likelihood than the peers to have a short squeeze, which, you could consider a positive. And then total cash is $400 million, and then total debt is $1 billion. So net, they have $712 million more debt than cash. This is never a situation where you want to be in, because it basically puts you under the gun and may force the stock to, issue new shares or issue new debt, which is never something you want to see for a stock. So not the best balance sheet, to be frank. But when we compare it to Affirm and SoFi, it's not that bad. So SoFi has $3.7 billion more debt than cash. Same number here for Affirm. And then Ally Financial has $12 billion more debt than cash. And then PayPal has $900 million more debt than cash. So in terms of net debt, cash relative to debt, the company does rank out as the best in terms of peer rankings here. So not a horrible number there. And then book value per share is at 7.5, excuse me, $7.60, which is a really good number and ranks out pretty solid amongst peers. Although Affirm has a pretty good number at $8.50 for book value per share, and then Ally Financial has $36 book value per share. So yeah, it all up, I think Upstart is a pretty solid company, and its AI lending system is clearly superior than the large banks system. So that gives the company a leg up, and I believe should lead to the stock outperforming over the coming months to years. And like I said, I'm waiting till we get a move back down to the DMAs or a move above this resistance level at about $55. So all in all, quite bullish on the stock. I do think the AI lean towards the stock is not fluff and really is a huge differentiator for Upstart. So with that being said, I'm bullish Upstart, and I will end the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone, happy trading, happy investing.